Hey everybody, in this video we're going to go over the 4 different ways in which options contracts can transact. Those are displayed here on screen now, and we'll also put a link to this article in the description of this video so you can check it out after the fact. But for the purpose of this video, we're going to go over examples of each of these different transaction directions for an options contract. Now we'll go over some examples of clear analysis of opening and closing flow trades. We'll start off with the buy to open concept. Here we see a number of orders that hit the tape at or near the ask price. For this example of an at-ask opening trade, we're looking at the ARC $43 put for April 19th, 2024. The bid-ask spread for this trade was 184 to 191. Directly to the right of that, we see the spot, also called the fill price, was 191, the same as the ask price. Additionally, the size of the trade was 300 contracts, while the open interest was 34. Therefore, we know that this is an opening trade because the size of the trade is greater than the current daily volume prior to that trade, plus the open interest. Let's take a look at an example of sell to open orders next. The process of scoping out sell to open trades is identical to that of buy to open trades, only this time we're looking for at the bid or near the bid transactions. For this at the bid example, we'll be looking at the AMRX $5 put for September 20th, 2024. The bid-ask spread at the time of this order was 80 cents to 95 cents. To the right, we see the order filled right at that bid price of 80 cents per contract. The size of the order was 150 contracts versus 0 open interest, and combined with the fact that this order size was greater than the total prior daily volume and the open interest combined, we can deduce once again that this is an opening trade. Now, what if the contract spot price is neither at the bid nor at the ask? What then? Here in the flow feed, we have an example of a near the bid transaction on the EFA $73.5 call for February 23rd, 2024. In this example, the bid-ask spread sat at 234 to 241. The fill came in at 236, so not exactly at the bid, but very close given that wide spread and much closer to the bid than it was to the ask. Again, comparing the size of the order to the pre-existing volume and open interest, we can deduce that this was an opening trade. Now below that, we have an example of a trade that's a little more unclear. The AG $4.5 call for March 1st, 2024. The bid-ask on this contract was 55 to 60 with a fill price of 57. Now, while this is 3 cents away from the ask and only 2 cents away from the bid, it's almost a mid-fill. Mid-fills don't give us much to go on. As I mentioned, there's no guarantee of a buy or a sell, just a higher likelihood based on the fill price within the bid and the ask. With a mid-fill, that likelihood, one way or the other, becomes a bit of an either-way situation where we can't really form a bias whether it's bought or sold. Now we can take a look at what closing positions look like. For buying the close, the flow will look similar to the buy to open examples that we already looked at, only in this case, we have some existing open interest. Remember, in order for there to be a position closure, there needs to be an existing position to begin with. In the case of this Apple $185 put for December 29th, 2023, we notice the entry short on 11/16, when 17.5 thousand volume transacted mostly at the bid. And then on 11/17, the open interest rose by just under 16,000 volume, showing that this was a new position. That position held for a couple of weeks until December 13th, when we noted at ask fills on the contract nearly the same amount of volume as our original entry. The next day on 12/14, we see the open interest drop considerably, confirming our suspicions of at least a partial exit on the initial position. Now, how would things look in the case of selling to close a position? So we're looking here at the options contract breakdown for the Apple $200 call from March 1st. On the left-hand side here, you can see these big green bars. These are indications of ask side fills. And if you look down in the historical volume and open interest chart below that, you can see that we had an entry on January 18th, where 7,500 volume transacted and 6,800 carried over into open interest the next day. All of that transacted ask side or at the ask. Now fast forward up here to the 24th of January, and you can see that on January 23rd, we had a little over 6,300 volume transact at or near the bid. That's what these red bars here on the chart above are. Now, what we can do here to kind of confirm that flow is we can just click on one of these red bars, and this will take us into the flow feed to show us these bid side transactions. All right, everybody, I hope this video helped you learn a little bit more about how options contracts can transact. For more education, check out the Unusual Whales education playlist in the description below, as well as the Unusual Whales education courses online.